And we are back in the Dream Plan Retire studio.
Been hiding under a rock during summer. It's been kind of hot.
John Gengle, Andrew Rafal. We figured we'd do a quick video. John, we're getting a lot of questions. We always do. I retire. I separate from service. What do I do with my 401k? What are my options? There's a few of them.
There are a few, yeah.
Why don't we hit on a couple of those options, both pros and cons to each?
Sure. Where should we start?
All right. So let's say I'm still working, or I'm 50.
50?
Planning to work another 15 years, and I'm going to separate. My new company has a 401k plan. What are my options?
So first thing you could do is you could actually leave that old 401k in your old employer plan. However, there's some drawbacks maybe on doing that. So one, you're not going to be able to contribute any more to that. Also, you know, you're limited to the investment options generally in that type of plan. So you're not going to have as much control over that.
Plus, it's one more account.
Keep track of, right?
Keep track of.
Yeah.
So what about if I have an IRA account? Am I able to roll that over and not pay taxes on it?
Absolutely. So qualified rollover, take those monies out of your employer-sponsored 401k plan, put them into that IRA or into that Roth if you have any post-tax money too. Right. No taxes due.
Right. No taxes due. And one of the advantages there, whether you're a do-it-yourselfer, you have more options inside of your own individual retirement account. Or if you are working with a financial advisor or advisory firm, now you can have professional guidance as to how those funds should be allocated, the risk with regards to your overall retirement trajectory.
Yeah, so getting monies into an IRA, you're always going to have more control, whether, again, you're doing it yourself or working with somebody. A lot more control, a lot more options available to you. But sometimes people might say, hey, I just want to keep it as simple as possible. You can always roll those monies into the new plan too. So whether you have an IRA or you don't have it, if you got a new plan, you can move money from your old 401k into that new plan, keep it consolidated.
Right. And an advantage too of the rolling it over to the new plan is that you have the ability, if need be, and we don't usually recommend it, but if there's an emergency, you can, in most cases with the 401k, you can take a loan against your 401k assets. Again, not part of the overall strategy we would recommend, but if need be, it's available. In an IRA, you cannot do that. We get that all the time. A lot of questions on that. Can I take a loan from my IRA?
Nope. And so, again, it is one of those very specific situations. If you have to take a loan, it is much more tax advantage. You're not going to end up paying taxes on that loan from a 401k versus your only option on an IRA is paying taxes and potentially penalties of taking that money directly out.
Right. And now age-based, here's a couple of points. If you are over 55 and you separate from service, you get a new job and they don't have a 401k. Well, one of the advantages of keeping that 401k in the current plan, if you separated after 55, is
you actually get to take that money out as a distribution without the pre-distribution penalty. So remember, on IRAs, if you're under 59 and a half and you take money out, you're going to pay a 10% penalty in addition to state and federal taxes.
Right. So that may be a reason to keep it. And then if you are your required minimum distribution age, which right now is 73, and you are a full-time employee of said company, one of the advantages of keeping that money in the 401k plan is
not taking RMDs. Yeah. And not paying taxes on them.
Right. And that's a big one here at Bayntree. You know, that's something that we would, sit with a client and see what their income is. And if you don't have to take out your RMD, it might be beneficial for you because you can delay the taxes on those funds when you stop working and your income drops. So that's another important feature. And some individuals will take an IRA and move it to their 401k if they are still working and over 73 because of that benefit. So that's something to think about. Not the right move for everybody, but just to know your options. And then the last thing you can do if you separate it with your 401k, which is probably the least advantageous, what would that option be, John?
Cashing it out.
Ooh, the old cash out. What's that mean?
That means I'm done with that employer. I'm not going to roll it into an IRA, roll it into the new plan, leave it in the plan. I'm going to take it out as a distribution, pay all of the taxes on it at once. So kind of a double whammy there, if you will. You're going to pay taxes on the distribution. Also, you're done growing that account for retirement.
Yeah, and you could give back 30 to 40% of it. So not the best option in most cases unless there's a major emergency. Yeah. So those are 3 or 4 different ways on how you can utilize your 401k when you separate, when you retire. As always, think of this as education. Talk to a licensed advisor, trusted team member before you make any decisions. We hope this was helpful. If you liked the video, please subscribe to our channel. Happy planning, everybody. We'll talk to you real soon.